is a stock market crash imminent? And I wanted to talk about this because Fundstrat came out with a piece today and talked about how July could potentially be brutal. And I don't when Tom Lee and the gang talk about use words like brutal, my ears get perked up a little bit. I'm like, I'm sorry, what did you say? So I got a little bit nervous about what's going on, and looking towards the month of July, it could potentially be a really choppy month. Historically, July always sucks anyway. The average rate of return in July is around 1.3%. And usually when we have big run-ups in the first half of the year, like we did this year, at 13% or greater, you have a 0.4% growth average. So it's pretty rough. So the level of chop that we might be seeing could be brutal in their exact words. Now, I'm not going to doubt them 1 second and kind of take those words lightly, only because they're usually pretty spot on, and they came up with some pretty good data. 1943, the first half of the year went up 26.4%, if you guys recall. That was around World War II, so things were booming and rocking and rolling. July was a loss of 4% that year. The last time we saw 13+% gains, 1998 was 2019 was 17.3 with a return of 1.3%. And then before that, it was 1998 at 16.8. It was a loss in July at 1.2. So I'm not saying that I don't think there's necessarily going to be a crash, but I think that we definitely should prepare ourselves for some really volatile times between July, especially now. We have some headline news that kind of continues to circulate with the Delta variant that people are very nervous about. So that could play a factor into this chop. However, we also have a really exciting earnings season coming up. So that may offset it. Who knows? But I think that it's very important to really be prepared for what could be coming for the month of July. And by all accounts, we always talk about how history doesn't necessarily, predict the future, but patterns are patterns, and this could certainly be one that might end up playing itself out.
Yeah, this is one of the reasons why, I personally have almost 50% of my account in cash, was because we have been running hot, a lot of 52-week highs, and we've said stocks can continue to run, but when you have a situation where you have stocks up, one of the stocks we're going to talk about our top 5 stocks for July, one of the stocks is up 50% year to date, and it's not a growth stock. Yeah. And so when you have those situations where you're trying to delineate between, okay, is this happening because the pandemic was so beaten down, now it's coming back? Or is it just a little bit of an overreaction, or the stock, not an overreaction, but the stock getting ahead of itself? We talked about that. That's what this feels like. Yeah. And so I'm in a unique position where my overall account is up 34% year to date. So being in cash and maybe missing a move, if the year ended now, I'd be happy with 35%.
Hell yeah.
And so you may disagree with this, because you could look at it and say, well, there could be greater gains. In my mind, I'm like, well, yes, I could get more gains, but I could eat into those 33%. Let me wait for a pullback that will happen sometime this year, and let me maintain capital. I don't want to be out of the market altogether, but I have liquidity as the market eventually could potentially cool down.
Yeah, and I agree. With you doing so well in the market at this point, why risk losing all of those gains when you can kind of sit back and wait for big opportunities? And I think that they will come this month. Historically, it just makes a lot of sense, but there is some good news about this. Even though we historically see a lot of chop in July, and a lot of this has to do with I don't know. It has a lot to do with the how do I put this? Just the way in which we've gone up. We've seen such a huge gain that this makes sense to see some pulling back and maybe having some reason to take some profits or what have you. And so I think that you look at this and look at the history and sit back and kind of just wait for the opportunities, because I think that they will, and I think that those opportunities may indeed come just before earnings season. So watch out for that. If we do see some selling off because of the Delta variants and there's lack of volume because it's July and not a whole lot of people are trading this time of year anyway, so that could definitely play a factor too. Just be, I guess, diligent and maybe it would be wise to at least have some cash on the sidelines to take advantage of some of the dips that we might see this month.
Yeah, we got a couple questions in here that I think are relevant. Jeppy Jensen asks, how will tech stocks do in July? I want you to answer that question, but also there are some high growth techs that are actually still trying to make their way back.
Yeah.
So they're not near all-time highs. So my question is, how do you think tech will do? Do you think overall, do you think everything will kind of pull back? Or do you think tech may outperform? How do you think that'll happen? And then what do you think will perform well?
I think it's interesting that we've seen a lot of tech that is just barely green on the year.
Yeah.
The S&P 500's up over 13% in the first half of the year, and something like Apple's only up 2%.
Yeah.
I mean, that's very unusual. So I think that we could certainly see a huge growth surge the second half of the year. And, strong markets, I mean, this is a very strong market. I think even if we do see some chop this month, that they're going to continue to be strong. History also has shown that the first half of the year is a monster year. The second half of the year is probably going to continue to be a monster. So barring, obviously, any crazy pandemic issues, I think that we're going to be just fine. It just may be a little bit turbulent for the next 3 to 4 weeks.
Yeah, that's a good point. And I think to your point is getting into those old reliable stocks. Like for me, I am compelled to get into maybe some ETFs, so I still have some skin in the game.
Yeah.
Because they won't be as volatile as the specific stocks.
Right.
Maybe get into the leaders like Apple or Amazon that if they go down, I don't mind dollar cost averaging into because I'll hold them forever.
Yeah.
And so that might be consideration, but I do plan to really sit down and say, okay, what am I going to do with this capital? I want to continue to free up more capital because I have profit takes on all of my stocks that are in the green. So out of 19 of my positions in the public portfolio, I think 16 are green.
That's awesome.
And healthy green. And so
Yeah.
I locked in the green. So all of them will stop out in the green if they come down. So that's a good position to be in. So there may be some more capital freed up. It is kind of tough to see Airbnb move. I did look. Apparently, I stopped out of Airbnb 2 days ago.
Oh, that sucks.
But I had like a 20% move. Again, it sucks, but it's like locking in profits.
Yeah, can't be mad about making that green.
Still high conviction on Airbnb, and I would love to get back into it if that opportunity presents itself.
Yeah.
So all those are considered. Guys, let us know in the comments, what do you think is going to happen with the market? What sectors do you think are going to do well? What stocks do you think you're going to be leaning into? Or do you not think that this market crash is imminent? Let us know what you think.